everybody. Welcome to another Ignite Equity Capital Raising webinar. And maybe let's just start out with the backdrop. We have a company today in the right commodity, being copper, in the right tier one jurisdiction, Australia. Importantly, imminent catalysts. There is an imminent catalyst in place, and also, in this case, a very short pathway towards production. So that is the backdrop. And let's just talk a little bit about the current market cap compared to the NPV. It is a multiple higher. So you really do have that upside in the project as well. And finally, on top of it all, there's another project that also offers some blue sky. And that's why we are thrilled today to be rejoined by Pat Williams, the Managing Director of Revolver Resources, as we help the company on its next stage of its journey and also towards a share price re-rating, which is what us as shareholders all want, including Pat, because Pat and the management team own circa 20% themselves. And with that, Pat, welcome.
Thanks, Greg. You've set that up perfectly, mate, and I must admit I couldn't have done better myself. Thank you.
Okay. Pat, for companies, maybe let's just start out with that are not quite though familiar with Revolver, and I know a lot of the investors already are, but maybe just back up for a second. The Dianne Copper project, can you just discuss it, just give some high-level metrics?
Yeah, look, the Dianne Copper project, Greg, still to this day is Australia's highest grade producing copper operation ever. It ceased operations in the mid-1980s. It didn't produce copper on site, but it crushed the rocks in what they called a DSO, a direct shipped ore. So it was a very, very high grade underground open stope operation. And the copper content in the rocks that it sold would, average 22%. So, it's a bonanza grade deposit. Unfortunately, unlike the circumstances now, copper was 50 cents a pound back then. Today it's $6.50 a pound. So
it makes a difference.
You get a lot more economies of scale. They ended, and basically since the mid 1980s, on granted mining leases, in a jurisdiction where mining is welcome, it's sat. It's sat until we came along. Between 2017 and 2019, before Revolver listed,
right.
We negotiated a 50-50 position and subsequently went forward and through the IPO became 100% owners. So it's a fabulous opportunity. It's there right in front of your eyes. The green rocks poke up out of the ground. It's always been the material that can give this company a cash flow kick ahead. And that's really what we've spent the last 2 years getting ready for, to bring this into operation. We're unashamedly standing behind this project. It's small, okay?
Right.
So it's a small boutique project, 4 years in operation. Yes, there is tremendous potential beneath, around. We just haven't had the exploration dollars. We listed, Greg, in a market where the tires kind of went flat on junior explorers. So we have done a very good job with the small amount of public money we've had. And we thought, look, this is tough. Let's go get ourselves $100 million war chest.
Right.
Let's put this project into operation. And in the space of 3 to 4 years, we'll be well funded, non-diluted, and ready to go and grow up our own projects and also go look for more. So it's a great business strategy, and we're really at the forefront of getting going with it.
Right. And at the risk of confusing investors, everyone, this is not 4 years from today. This is 4 years from when Pat was discussing earlier there. But everything is about the future. Maybe, Pat, just talk about the NPV, CapEx, especially that ratio, and then we'll cover the catalyst after that, but just to give people the high level.
Yeah, look, as I said, Greg, we've put a business plan around this project and we've spent 2 years doing it. We are construction ready, and that's a part of the reason for the little bit of funding today. We're ready to get going and building this. So, we talk in terms of cash flow. So, at a $13,000 US copper price,
Right.
we've got in excess of $150 million of free cash. So the company has tax credit. That translates to a, $75-80 million NPV.
Yeah.
So,
At these prices.
it's going to cost us $30 million to build this, which is 3 tens. 10 of earthworks, 10 for a process plant, and 10 to operate the project through until the end of the year, until we're into steady state revenue. So really, if you're into the old world of CapEx, OpEx,
absolutely,
it's a $20 million CapEx build. It's minuscule to convert this opportunity. It's a well studied, well designed. We've got a highly leach amenable copper ore that up on site now, because the green rocks poke out of the ground, the rain washes the copper out of the rocks. So it's we've assessed the risks that we think are completely critical. We've addressed those. We're ready to fund up and get into operation.
Right. And fund up. Okay, this is a great jumping off point, because to us, the funding, getting it in place is the seminal event for the company and for a re-rate. Maybe just talk about where we are on the funding as far as, well, I'll ask it open-endedly.
Yeah. So Greg, we've taken a very prudent position. It's been a 2-year journey, studying, designing, engineering, getting ready. Okay. For the first half of that journey, we thought, look, let's open this up as a joint venture equity opportunity. But 12 months ago, when all of the facts and figures were in, particularly the test work results for the metallurgy, we thought, look, our shareholders can really benefit here. So, it puts pressure on management. It puts, challenge on management. We took the decision 12 months ago to debt fund this. Right. So after the cost of financing, after the trimmings that, the debt funders want, we have an immeasurably better outcome for shareholders, much, much more free cash. And they're the numbers that we're talking about, which are post-funding, post-cost of funding, post-royalties, post-construction. We've still got more than $100 million of free cash to grow a great company. So, and we'll be getting into those cash flows, later this year if we stay on the timeline we're on now. So that's the broader backdrop.
Yeah.
The project related funding now.
Correct.
We've certainly been, bringing interested parties along, but it was like a light went on. $13,000 per tonne copper over the Christmas New Year period. It's held at that rate. Everyone can look at the commentary on what's driving that going forward. Right. So what's happened, and it's no surprise, we've been knocked over by the inrush of, every week we get another term sheet. Every week we're getting better and better financing options. So we're with yourself and Sean, you really bought into our strategy over the last 6 months. We're taking this funding to continue what we're doing on site. We're going to place some orders for equipment in the procurement stage. We're going to continue with the site early works, but we're going to mature the best financing terms that we can close out on in the next 4 to 6 weeks. So, and it's been really refreshing to see that inbound inquiry, and the terms, the cost of money has improved enormously. So we're going to convert that for the benefit of our shareholders and the deal that we do. So lots of interest, lots of inbound inquiry. We're in that purple patch, as you said, right place, right time, right commodity. And we're ready to go. Once the funding's closed, we get going. But the little raise we're doing now just keeps the momentum. We've got a great team assembled. It keeps the work going so that we're, onwards and upwards, using 2026 to build and generate copper.
Pat, that sounds great. Now, obviously, this in itself could make for a fabulous investment, but Sean and I, being the greedy people that we are, we always want everything for free. Maybe just talk to us about Osprey, because that's in there as well, and that's another blue sky.
Greg, the company was founded on Project Osprey 10 years ago. So I use the mantra, we're an overnight success, but we've taken 10 years to get here. So the Osprey project, it's a global tier one opportunity. We've stewarded that, judiciously for 10 years. It's large scale, tier one global deposits, Mount Isa style, IOCG style deposits in the Mount Isa precinct. So it's the right postcode. We have comments and recognition from the industry that we've stewarded that well. So if you look at the latest release, we have a target map of drill ready targets that should and could lead to major scale discoveries. So it's been served up, but again, no capital, not enough money to do it justice. So rather than get a dollar, spend a dollar, get a dollar, spend a dollar, we're going to use Dianne as the cash cow for the company's future growth. So we have opportunities in and around Dianne, not just mine, and we have this fabulous Osprey project that we hope to be there this year, putting money into. Absolutely.
Right. So then again, that offers another upside to the company. So I want to open it up to Q&A because I know that everybody, that's the thing I'm getting, and I promise everybody. I just want to recap though here before we get to that. We have in the Dianne project the right commodity again, an imminent catalyst here. Pat mentioned, a number of term sheets in the door here. I assume some of them are already probably in acceptable format, but the price has been moving in our favor. So everything is really looking fantastic. I think that now is a good spot, just because it's been about 10 minutes and I know you want to hear the rest of, you want me to be quiet, and I will open it up to Q&A. Now, either ask a question in the chat, or if you want to WhatsApp me, any way that works is fine. And I will start out with the, just hang on a second, guys. What is the expected timeline for funding? What is the expected timeline for construction? I think that you spoke about the timeline to funding, which is imminently about here. But maybe construction too. Can you just touch on that, please?
Yeah, look, we're publicly taking a position that it's a 9-month, construct and commission timeline, Greg. So that still puts us into copper cathode. And I don't know if the listeners are fully aware, but that's the product.
Unfortunately, I can see it, but it's coming out a little weird. But yes,
that's. So it's a LME 99.99% pure copper cathode product. We're making that on site, and on our current timeline, that's bankrolling and providing revenue for the business in 2026.
Got it. Okay, another question, fairly open-ended. What will it cost to explore Osprey?
Look, we've spent, so another part of the story, sorry to take so long, is
that's okay.
The Osprey tenements were held by WMC. It was rated by them to be their number one base metals tenure in the country. They were bought by BHP. There was an edict in BHP to give away exploration. We picked it up. So our spend, their spend, it's in excess of $15 million. So we've run heli EM programs. We've done significant regional drilling. So we've spent, us and previous explorers, in excess of 15 million. We would seriously deploy, 5 to 10 and expect to have some pretty remarkable results in that time.
Got it. Okay. And again, with exploration, obviously, you can spend a lot of money, a little money, and it's also very controllable. The next question, and we're jumping back to Dianne, just to make it clear there, what is the cutoff grade at Dianne?
The resource was published at an oxide cutoff of 0.25%. That's standard. That's what the independent specialists do. But if you look at the technical work, it's an outcropping ore body. It's continuous mineralization.
Yeah.
We will be taking everything down to about 0.15 because we're mining it. It's in the truck. It's on the way down to higher grade. it's highly leach amenable, plus 95% recovery. So we're going to squeeze every piece of juice out of the lemon and make copper from it. So in that 0.15 to 0.2 is what we'll be mining to take to the crusher and the leach pad.
Right. And assume also, I'm just asking this now, to potentially, once you're down there, to extend out the life of mine, would you do some more drilling at the bottom?
Look, on the way down, we're designing in as a part of the pit design benches. So there is quite an exciting exploration target. We stopped short of publishing that in the release. There's already identified sulfide in the JORC report. We've got sulfide ore categorised below the pit floor, so that's already there. There's a tremendous exploration potential immediately below that. It's been difficult for us to access from geometry and accessibility. So yes, the open pit design will create benches for us to drill immediately below and proximate, because the ore body doesn't taper off. It's a cut-off at a 2+ metre thickness of high grade ore, so it's not finished. Okay, we just haven't been able to reach with the drilling. So that's an immediate priority through operations that we'll be undertaking.
Got it. Okay, another question is coming in here. Does management own a percentage of the business? Yes, a lot. Pat, maybe talk about that.
Yeah, look, we're the board and management. We're in excess of 20%, Greg, and the not only the ownership, but since we've come together in our relationship, the shareholder loan that comes from Ranger provides funding. You guys provided some funding. We've done some more through November and December. You're helping out now, so there's a heavy degree of commitment and ownership, and we run the project hands-on. I'm up in North Queensland. It's my baby. It's getting a lot of close personal supervision to make sure this thing works.
Right. Pat, we know it's a busy day here. We'll keep it short. Again, investors, we will be heavily investing ourselves. Any questions, just let us know. We will, if there's something we can't answer, Pat is available, and I'm sure we will get it answered imminently, because that's the way he operates. Everybody, thank you so much for joining us again, and be well. Bye-bye, Pat.
Thanks, Greg. Good